Running a business here in the UK comes with all sorts of legal responsibilities and obligations. And one of the most important aspects of running your business here in the UK is going to be the need and requirement for you to understand your business taxes. Now, this is going to be the case irrespective of what business structure it is that you use to run your business in the UK. So that means if you're a self-employed person, if you're someone who has a UK limited company, or indeed if you're someone who is even running a UK liability partnership, you are going to need to understand your business taxes. Now, today we're going to be talking about what particular business taxes you might need to be aware of here in the UK, as well as what scenario you might be required to pay those taxes. Hello, if you're new to this channel, my name is Tess and I'm a UK qualified accountant. And on this channel, I share weekly videos to help fellow entrepreneurs like you grow and thrive in their businesses. If you ever want to work with me on a one-to-one basis, then please use the links in the description box below. The very first type of tax you need to be aware of is capital gains tax. Now, this type of tax is paid whenever you make a profit on any assets that you sell as a business owner. This might be the case where you sell assets such as an investment company that your company owns, okay, or even when you sold shares, or even selling other assets such as registered trademarks. In all of these scenarios, you will be required to actually pay capital gains tax on any profit that has been generated, on those assets that you have now sold. And the next type of business tax that you might need to pay is corporation tax. Okay, so this is the main type of tax that you will typically pay if your business is structured under a limited company structure. You might also be required to pay this tax if you're a foreign company that has a UK branch or an office here in the UK. Now, corporation tax is typically paid on an annual basis, and the rate of corporation tax that you pay is going to be dependent on the amount of annual profits that your business or your company has generated in that particular year. But the current range for corporation tax is currently anywhere between 19% right up to 25%. Now, you should bear in mind that the corporation tax rates do change, from time to time. So it's definitely a worthwhile thing for you to make sure that you keep on top of what the rates are and how they're changing, because the tax laws do change from time to time. The next type of business tax that you want to be aware of is going to be income tax. Now, generally speaking, there are two main ways that you could potentially be in a scenario where you have to pay income tax, okay, when you're running a business in the UK. The first way is when you are running your business as a freelancer or as a self-employed person, okay. You will be required to pay income tax when you earn income that is above your personal allowance threshold, okay? And you'll usually be able to pay that income tax by filing your self-assessment tax return, which usually has a deadline of the 31st of January each year. I do have a couple of videos up on my channel where I've spoken in depth on self-assessment tax returns and some of the key things to watch out for when you are completing your self-assessment tax returns. The second scenario that you will potentially be faced with having to pay income tax when you run a business in the UK is if you actually have employees, okay? So you're a UK business owner, and as part of that UK company that you have employees there, okay? So what you will do is you'll be required to pay income tax deductions over to HMRC. Those income tax deductions are income tax deductions that you have taken, from your employees' salaries. Okay, so you've taken those deductions and you have to pay them over to HMRC according to what your pay schedule is. You might be paying your employees on a weekly basis, on a fortnightly basis, or on a monthly basis. But however way you're paying your employees, you will also be required to pay those income tax deductions over to HMRC. If you run your business out of a physical location, okay, that means you basically have a shop or you have an office from which you're actually running your business, then you will need to pay business rates tax, okay, and this is going to be paid to your local council. The amount of business rates tax that you need to pay will really depend on where the location of that office is, and also what the rateable value of that particular property is going to be. Now, for instance, if you chose to have an office in, say, London, okay, you are definitely going to incur a lot more in terms of business rates taxes that you need to pay if you had an office in London compared to, say, if you had an office somewhere up in Liverpool, for instance, okay, just because London is obviously the capital city of the UK. Now, the next tax you should be aware of is a VAT, okay, also known as value added tax. Now, typically VAT is paid by many businesses that are VAT registered, okay, and it is paid on a variety of different products and also services. Now, it is compulsory, it's a legal requirement that you register for VAT once your turnover is £85,000 and above. Now, you don't have to actually wait until your turnover is £85,000. You can actually register for VAT even before that. But obviously, I would definitely suggest that it's worthwhile you discussing with your accountant or an accountant who can advise you on whether or not it's the right time for your business to actually register for VAT and what the implications of doing so might mean for your business. Now, that leads me on to the next type of tax that you definitely want to be aware of, which is dividend taxes. Now, dividend taxes are taxes that you pay on any dividends that you take, okay, from the company that you're running, okay? So if you're a business owner and you have a UK company and you decided to take dividends out of that UK company, then you'll be required to pay dividend taxes on those dividends if they are above the current dividend allowance for the year, which is currently set at £1,000. So if you took anything more than £1,000 out of your company as dividends as a business owner, then you would have to pay dividend taxes on those dividends. The rate of tax that you will pay on those dividends will really depend on what your income tax band is. So it's definitely worthwhile thinking ahead of whether or not it's a worthwhile thing to do, depending on what your situation is, whether taking dividends out is really right for you as a business owner. The next type of business taxes to consider here would be national insurance contributions. Now, generally, if you're self-employed, then you would be the one who would actually sort out your NI contributions through the submission of a self-assessment tax return. If you run a business, okay, through a UK limited company, then there are different classes of national insurance contributions that you would have to pay attention to. Now, the amount you're going to pay in national insurance contributions will really depend on how you're employed and also what you earn, okay? There are different classifications of national insurance contributions from class 1 all the way to class 4 national insurance contributions. Now, the rate that you pay for national insurance contributions do generally tend to change on a year-to-year basis. So again, this is definitely another tax that I would definitely stress that if you're a business owner, you should try and keep on top of, just because the rates do tend to fluctuate from time to time. Those are some of the business taxes that you definitely want to consider if you're in a position where you're starting a business here in the UK and you're unsure of what your potential tax obligations might be. Please don't forget to give this video a like and make sure to hit that subscribe button and turn on your notifications. I will see you in the next video.